A fleet of white vans pulls out of a small industrial park. You recognize the logo. It is the exact same family-owned heating and plumbing company that has served your town for 40 years. The owner is retiring, but he did not sell the business to his top technician. He did not pass it down to his daughter. He sold it to a private equity firm managing $17 billion from a high-rise in San Francisco. This is happening in every suburb, in every town. The local car wash, the veterinary clinic down the street, the HVAC repair service. They look exactly the same on the outside. But behind the scenes, something invisible has changed. The smartest money in the world is quietly buying your neighborhood. The first clue hides in plain sight. Look at the demographics of small business ownership. Baby boomers own roughly 2.3 million small businesses in the United States. For decades, these enterprises were the engines of local economies. Now those founders are stepping down. But the next generation largely does not want to take over the family trades. They went to college, they moved to cities, they pursued digital careers. This creates a massive generational supply of cheap, profitable, essential businesses hitting the market all at once. It is an unprecedented transfer of assets, and institutional capital is stepping in to catch the wave. The second clue is a reaction to chaos. Over the last few years, tech valuations swung wildly. Artificial intelligence began disrupting digital labor. Institutional capital sought safety. They looked for assets that exist in the physical world. You cannot offshore a broken air conditioning unit. You cannot automate a leaking pipe in a flooded basement. You cannot ask an algorithm to cure a sick dog. These are recession-resistant cash flows. They are essential services. By 2025, private equity accounted for over half of all HVAC transactions in the country. Wall Street realized the ultimate hedge against digital disruption is unglamorous reality. The mechanism itself is a mathematical trick. In finance, it is called the roll-up. A private equity firm does not just buy one local plumber. They buy 50. A single local plumbing business generating $1 million in profit might sell for 4 times its earnings. That is a $4 million valuation. But if a firm bundles 50 of those businesses into a massive national platform with centralized dispatching and corporate branding, the math changes. That combined entity commands a 15 times multiple on Wall Street. The value effectively triples simply through aggregation. They buy small, package them together, and sell massive. The tension arrives at your front door. The familiar local branding stays on the van. The uniforms look the same, but the operations become hyper-optimized. Technicians are given aggressive sales quotas. Independent veterinarians are pushed to upsell expensive lab tests. The focus shifts from lifelong customer relationships to quarterly yield. You are no longer just paying for a service. Your daily life has been financialized. Your leaking roof and your broken heater are now high-yield asset classes for private credit. The neighborhood is being optimized for a spreadsheet. The mystery reveals a profound truth. This is not just a story about private equity. It is a mirror reflecting our own flawed investing psychology. Retail investors are constantly conditioned to chase hype. You are told to look for the next tech unicorn. You are pushed to speculate on rapid capital appreciation. Meanwhile, the smartest, quietest money in the world is doing the exact opposite. They are buying boring, predictable, defensive cash flow. They do not care about viral trends. They care about utility. While the public gambles on the future, institutions are buying the bedrock of the present. The final piece falls into place. You do not need a $3 billion fund to use this mental model. The lesson is to pivot your mindset. Stop being a consumer of hype. Start being an owner of cash flow. Shift your focus toward unsexy, dividend-growing assets. Or perhaps, look at the surging trend of informal entrepreneurship. Maybe you buy a boring business yourself. True wealth is rarely built in the spotlight. It is built in the unglamorous trenches of reality. Find the friction in everyday life. Own the solution, quietly.